All right, my friends. Dave writes in asking how the Secure Act will affect, inheritances to the children. All right, so he says there's a Market Watch article where a woman was very upset by the Secure Act. She and her husband had amassed considerable money. He believes seven figures was mentioned through frugality, hard work, and just landing in a position which had been provided with government support. Unfortunately, it was a 401k. They're going to have significant negative ramifications to her heirs due to having to collect the inheritance with only a 10-year time frame. And apparently, there was too much money to do a reasonable Roth conversion. This is Dave now, Doug, saying one of my wonderings is what is the current process? I believe inheritance taxes only apply above a significant amount of money, which is why I never worried about it. I believe the woman wrote that for at least one of her children, receiving the distribution could bump it up in two tax brackets. All right, so I just surprised to learn. Okay, so he says he was just surprised to learn this was such a big issue. All right, so where Doug is missing, he's looking at inheritance tax as equating to income tax, and when you're inheritance taxes, unless you live in Kentucky, I think New Jersey still, or maybe New Jersey got rid of the inheritance tax. Kentucky, Maryland, and like one other state, there's an inheritance tax. Now, some other states, Massachusetts comes to mind. I think Minnesota, there's still an estate tax, but Doug asked specifically about inheritance tax. From the federal perspective, it's just not an issue in this day and age. I mean, unless you have multi-millions of dollars, just not an issue. From a state perspective, it's just not an issue unless there's a few states that could be an issue. But inheritance tax is not an issue we're contending with here. What we're worried about with the Secure Act, Doug, is actually we're worried about income tax to the heirs. All right, and this is what this lady's upset about. They squirreled away enough money in which to stretch the IRA over the life expectancy of the heirs. That means the heir receives it at 55. Their life expectancy is probably 35, so they have 35 years in which to exhaust, i.e., take the full distribution out of that seven-figure inheritance, and 35 years in which to spread the tax consequence on those distributions as well. And now that's going to be gone. In this case, let's say they're $1 million. Two kids, each kid gets $500,000. 500 divided by 10, whatever that is. Off the top of my head, I don't know. I guess was that 50,000 a year, right? So it'd be 100,000, right? No, 50,000 a year, something like that. They'll have to take that $500,000 per kid over the course of 10 years, which is going to add that'd be 50,000 a year. It's going to add 50,000 to their ordinary income tax, and that's what she's griping about. I got no qualm with that. I mean, I guess she's griping. This woman is, but retirement accounts are never, ever, ever designed to give your children beneficial tax treatment over the course of their lives. Retirement accounts they're designed to allow you to retire in a more tax favorable way. And again, if you follow my channel at all, IRAs, 401ks, TSPs, 403bs are not designed tax favorably on the back end as much as people think they are. They're just not. So in this case, this lady, I'm sorry, it stinks. She followed the rules, but they're still getting the money. They're still getting a tax benefit over 10 years. I mean, I don't. You're not going to have a whole lot of sympathy from me in that regard, that's for sure. But this is not inheritance tax. It's what's called IRD, income with respect to the decedent, and that just means that what the decedent, the person who died, did not pay tax on, that income is going to transfer to the heirs, and they're going to have to pay it. Hope this helps. But Secure Act is not, it just get rid of the stretch IRA and makes more taxes due to the heirs. That's all there is to it. All right, thanks.